Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning, middle of the week. Markets, of course, have done well last two sessions. We'll see what happens. Last night, Q's not all that great. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, good morning.
Hi, good morning. So no decisive moves coming in from the global markets. So I guess it will be all about individual stocks. All the big four earnings, nifty earnings that we were expecting came post-market hours. And today is going to be another earnings-heavy day with M&M Ashok Leyland coming out with the results.
Point well taken, Rima. But I think the bigger action really is in the broader markets because that's suddenly come back to life. And the big outperformance you've seen the last few trading sessions, if that continues, people will be feeling good because for the last 18 months or so, you had the headline index that was holding steady, but the mid-caps were under pressure. And now that's reversing a little bit. So hope that continues.
And I think a lot of people would be, even if the Nifty doesn't go anywhere.
That's okay.
I think broader markets doing well makes a lot of difference. Well, let's just take a quick look at the limited Qs we have, actually, if I can put it that way. Not very much, right? US equities kind of ending sideways, slightly lower. NASDAQ down about 0.6%. And, it's every day there is something new with regards to AI anxiety. So it was software stocks last week. Beginning of this week, it was insurance brokers. Last night, it was wealth management firms, which sold off. So the financials as a space was under pressure. Morgan Stanley, for example, was down 3-4%. A bunch of other names. Charles Schwab, of course, is the leader there, and that was down about 8% or so. So, these are newer models, specialist models which are being built on top of large language models like ChatGPT. They're being released out there in the market, you're seeing the market starting to worry about whether some of these business models are going to come under threat. Sometimes it is not really that significant, and because the overarching theme, which is real, is AI and what AI will do to various industries over a period of time. I guess what's also happening is that people are shooting first and asking questions later because you sort of in a way put one headline and take that and put that on top of one entire industry and. It's that kind of thing because people are just trying to figure out how fast are things moving and what is the actual impact of all of this new technology and the specialist kind of models going to be on things like, as I said, insurance broking, wealth management, and of course, enterprise software as well. Now, retail sales, if I can talk about that, unexpectedly stalled in December. And of course, the implication of that is the market is going to resume rate cuts on the back of this. President Trump, of course, wants rate cuts. But you've got two gentlemen, both hawks, I must say, from the Federal Reserve, who spoke last night in favor of rates being kept unchanged, right? But those are both have been historically hawks. Anyway, the 10-year yield fell about 6 basis points to 4.14. So that clearly responding to the weaker retail sales number. And, of course, what that implies in terms of data. Later today in the evening, we will get the U.S. jobs report. And I think that's going to be important. Remember, President Trump's team, last, of course, was Kevin Hassett. They've been trying to get people up to speed with the idea that maybe the jobs number is not going to be all that great. Do you remember that comment that the job numbers perhaps going forward in months ahead could be weaker, but that's because of population degrowth? So I would assume, comments like that are just getting the market ready for perhaps what is going to be a weaker data set. We'll see if that really is the case, and the number usually comes around market open. Now, with regards to oil prices did not move, but you had two things here. So Oman essentially saying, the foreign minister is saying discussions between U.S. With regards to Iran, U.S. last week were productive, but Trump essentially said that he might send a second carrier to strike Iran if talks fail. So it could be carrot and stick. It could be just pressure, building up pressure more than anything else. But prices did not move. But there is a bit of buoyancy there in oil prices. Now, I'll just tie in the levels here. So, as I said, Monday, of course, was great. Yesterday was good. What will today hold? So, if you look at the price action yesterday, the opening and the closing are pretty much around the same levels. typically that would indicate a bit of a loss of momentum. The high yesterday was almost at the level we put out yesterday, which is 26,020. That is basically the midpoint of the big bar that we saw 3 days back. So we almost got to 2620, and then the market opens, and then finally sort of closes around those same levels. So is it's just a question at this stage, as the market moves, losing a bit of momentum, we'll see. Supports remain the same, unchanged. The gap zone is 25,450 to about 25,640. I think today there's so many earnings which have come through from last night, and large numbers, big numbers. So we'll spend a lot of time through the course of the day to decipher some of that as the day goes on. GIFT Nifty, I think, is still indicative of a slightly higher open, 50, 60 odd points. It's not bad at all. So 26,052 is the indicative open as far as GIFT Nifty is concerned. Positioning and what did funds and institutions do yesterday? Nigel has walked across to the wall for an explanation. Nigel, over to you.
Well, part of the reason that the Nifty came off yesterday's high was, in fact, it was the weekly expiry as well. So that was the factor that did play out. And that's where towards the end of trade, you did see the Nifty slip a little bit. In terms of flows, the DIs, they bought large, close to 1,000 crores. And the FIs didn't sell. That's pretty good news, right? Even if they don't buy big, you don't want them to sell, because that's been plaguing the market over the last 12 to around 18 months. But covering was evident, both on the Nifty as well as in the Nifty Bank. You had them end, higher yesterday, and you had the open interest that was lower. So there were signs that there was a bit of short covering that did take place, and that perfectly tied in. Because you pull up the FI net short number, in trade yesterday, you had the shorts that covered out close to around 5,800 contracts, and now the short position has come down to around 78% or thereabouts. And the power of short covering really has been on display, because the FI short positions, just in the last few trading sessions, it's down by close to around 65,000 contracts is what we've seen out there. While the Nifty, well, it's popped up close to around 1,100 points. So the power of short covering is on display. And I've been repeatedly saying this. A net short market actually could be a blessing disguise. And that's precisely what's happened in the last few days, going by the bounce we have seen and the kind of short covering that we're seeing. Clients, they are net long. Yes, they continue to remain net long. But they have unwound close to around 50,000 contracts in the similar period between February 1st as well as in yesterday's trading session. So long, but gradually they are booking some profits because they were doing the counter, they were going against the trend at that point of time, and now they're booking some profits. The PCR, well, it's holding at around 1.2, and there were signs of writing, both at the 26,000 call as well as the 25,900 call. And out there, if you look at the premium on the 26,000 call, it's more than 120 rupees or thereabouts. There were signs of writing out there, while on the put as well, 110 rupees out there. So just to tie in the levels, the near-term resistance comes in at around the 26,100 odd mark, going by the options data. Yesterday, the 26,000 mark was resisted, so we'll have to keep an eye out on that. And support is at ballpark around 25,700. First reference point around the 50 DMA as well. The Nifty Bank went through a bit of consolidation yesterday, but remember, it has support at around the 20 as well as the 50 DMA. That comes in at around that 59,400 to around 59,500 odd mark. That's about the headline index. But I think the best part about the last few trading sessions is the way the broader markets have outperformed. Even in yesterday's trade, you had more number of stocks advancing than declining. You'll want more amount the same. Even if the headline index needs to consolidate, you'll want the broader markets to participate, because that's what makes your portfolios feel good. Otherwise, we're in a good space, I think.
Thank you very much for that. Let's straight away address the global markets where we're headed. Drew Pettit, Director, U.S. Equity Strategy at Citi, is now joining in. Drew, the latest AI fear to grip the markets is the potential disruption to financial advisory companies, wealth management, tax planning companies. And we saw that in the stock price. Charles Schwab was down 7-8%. LPL Financial got crushed yesterday. How big a disruption is it? Is it just preemptive de-risking, as Prashant put it? Shoot first and then ask questions later. How are you all analyzing the impact on financial services companies?
Yeah, it's funny. I'm going to take this back to the software discussion and just AI disruption in general. It's not about the near-term earnings. Financials looked really good during earnings season. Software stocks before that looked really good during earnings season, and actually had numbers revised up for the full year and even next year. When we have disruption, when there's new tech and innovation in any industry, it's a problem out in the future. It is what we call a terminal multiple problem. So for software to sell off 20% from its highs, over the past 6 months, it really just took a couple multiple turns out of the terminal multiple. So instead of putting, let's call it a 26 PE on software stocks in 3 years' time, you put a 24 PE on them, and guess what? You have a pretty aggressive sell-off. The same thing could be said of financials today. So again, investors are assessing that long-term risk, but it has a really large impact on values today.
Yeah. So Drew, overdone or not?
I think in software, yes. The way I think about this is if I de-risk the terminal multiple and I stop trading stocks or buying stocks that have to go up because I'm going to put a bigger PE on them in the future and really de-risk that, take that down, make the story not about the multiple going higher, then I feel better. So again, we're dip buyers in software. We still like owning cyclical risk, but understand that no risk, whether it's on the growth side of the market or the cyclical side of the market in the US, is cheap right now. So we want to be barbelled. We want to own both so we can manage these really aggressive rotations from one area to the next.
Hi, Drew. Good to see you, Ben. How are you approaching equity markets, though? You know, the developed markets, the mother market, the US market actually has outperformed. At current reckoning, how would you approach global equities between developed markets and emerging markets? And I think in the past you've mentioned that India could be one of the preferred emerging markets. You stick by that?
So we're talking about diversification. So the story we're telling in the US around buy growth and buy cyclicals, we like risk, we like beta. So don't buy GDP plus companies, but don't buy defensives, buy diversified types of risk. That story is the exact same one we're telling globally. We're overweight emerging markets. We like Japan. We're neutral on the United States. And then we're underweight UK and Australia, a little bit kind of less risk, a little bit less cyclicality in those markets. The broadening trade and different opportunities in cyclicals and growth is how we want to position, whether it's in the US or globally. And on India specifically, look, we've been neutral on India within our EM overweight, but we totally understand that the trade news recently can definitely bolster sentiment. It could bolster flows. You could see some more positive action from the FIIs. India's been underweight in a lot of emerging market portfolios. General, we like being there, but we still like some other markets like Taiwan and South Korea a little bit more right now.
So neutral on India in the emerging market basket, Drew, but is there a case to upgrade India?
We'll see. That's something we'll have to talk about in our next global discussion. We tend to look at these things on a quarterly basis. But to us, when we're thinking about any emerging market in this environment right now, it's all about the revision trend. So we'll see how the trade news and earnings season plays out. As revisions shift, that tends to be our focus globally, including in emerging markets.
Yeah. Drew, any other strong sort of views across assets? I mean, so much has happened, right? Gold and silver and oil is, of course, another one. What's any strong views here?
Get some sleep while you can, because the news cycles just keep coming faster and faster, and you see these little pockets of volatility everywhere. But honestly, from a diversification standpoint and from an investor reaction standpoint, what we're seeing is people actually buying more international equities against this backdrop, against volatility in commodities, flows there decelerated. Fixed income's been a really good holding place. Again, diversified fixed income exposure. People are buying different types of credit. It's not just treasuries and safe plays. And then on the equity side, look, I think this is a really important talking point. U.S. investors bought more international equities than they bought home country equities and ETFs in January for the first time in almost 3 years. So you're starting to see global diversification on the equity side play out in a lot of U.S. portfolios right now.
Yeah. Drew, we'll leave it there. Thank you very much for joining us. Get some sleep. I think that's the wise words. But we're starting our day, you're ending yours, and look forward to our next one. Thank you very much for joining us here on CNBC-TV18. Well, let me just quickly run you through interactions which are lined up here on the program. 8:35, we've got the management of Balrampur Chini joining us to discuss their third quarter numbers. 9 o'clock, Vishal Manchanda of Systematics Group to talk about developments in the pharma space. 9:20, Shreyas Devalkar of Axis Mutual Fund will be a market master of the day. 9:30, Apollo Hospitals joins us to discuss their December quarter performance. The management of Titan will be speaking with us at 9:40 on third quarter. 9:50 we'll be speaking with Samvardhana Madhasan on their third quarter earnings. Oil India. It's a long list of companies. Oil India management at 10 o'clock to talk about earnings, and towards the end of the program, Lata talks about the trade deal and its impact on the rupee, India's macro. Santanu Sengupta and Arup Rakshit join her for that.
Time to slip into a quick break. A lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. We're looking at Titan, Apollo Hospitals, Britannia, Eicher Motors, Jubilant Food, United Breweries, Torrent Power, as well as Aether Energy. All of them will be reacting to positive news flow, while BHEL and Auto Pharma will be reacting to negative news flow.
Good morning. You're watching Bazaar Morning Call. It's a Wednesday morning. The Gift Nifty is trading with a positive bias, but we've got a heavy slate of corporate earnings and news to react to today. So let's straight away get to the action with our research team. This is CNBC-TV18's list of top stocks for the day. And the big one is going to be Titan. Vinny, how did the numbers look?
So as expected, it's a good set of numbers that's coming from Titan. Better than what the street was expecting as well. Revenue growth 40%, obviously that we had in the Q3 update as well, but 40% revenue growth. EBITDA is grown 55%. Margins have seen an improvement of 100 basis points. 10.4% is what the EBITDA margin stands at. And there's an exceptional loss this time of 138 crores. So profits now are at 48% growth on a year-on-year basis. Now, what was good? Obviously, EBITDA that was better than what the poll was. Jewelry EBIT margin, that is also coming at 10.6%. versus 9.5%. So the bigger segment is doing well for the company. And overall, a started ratio 26% versus 28%. New buyer share, that has seen an increase. That's at 45% as well. CaratLane seeing good growth of 42.3% on a year-on-year basis. And the jewelry market share continues to be at 8%. We're expecting green for the stock today. Con call is underway. We'll get some key updates there as well.
Okay, all right. Thanks a lot for that, Vinny. Let's hop across to Ekta. She's here to tell us about Apollo Hospitals. Morning, Ekta.
Morning. Well, better than expected set of numbers. The revenue was up around 17%. The street was expecting around an 11% growth. The margins also came in at around 15% and the profit at around 516 crores. Now, it was firing on all three cylinders. So Apollo Healthco, which is basically the pharmacy plus Apollo 24/7, the revenue was up 20% this quarter. Lowest ever digital cash loss is what they incurred this time at around 29 crores. Hospitals, which is basically the bulk of the business, Q3 revenue was up 14%, margins at 24.8%, which was up 73 basis points year on year. And Apollo Health and Lifestyle, which is basically the retail and diagnostics business, revenue was up around 20% there as well. There's a call taking place at 2 p.m., but I expect the stock to be in the green today.
Thank you very much for that. Big day for FMCG numbers. Vinny, back to you for Britannia.
Britannia also, again, a good set of numbers coming in from the company. So a good day that we're expecting from Britannia. Revenue growth in line with expectations. EBITDA margins have seen a good expansion on a year-on-year basis. Around 130 basis point expansion in terms of EBITDA margins. Gross margins, also good improvement there. Profits of the company, 17% growth. The company has said that, in October, there's some disruption by GST transition. Business over there grew by 12%, and in November and December, they saw better growths coming in. So yes, disruption in October, November, December, 12% growth. Healthy growth mainly was driven by momentum across biscuits and adjacent categories, and they saw a relatively stable commodity environment. So that's a positive for Britannia. All in all, good numbers, green expected here as well.
All right, Vinny, thank you very, very much once again. Eicher Motors is the next one we're going to focus on. Surya's got details on this one. So, good morning.
Morning, Prashant. So, if you remember 2 years ago, there were talks about competition and everything, and then Eicher Motors had changed its focus to growth over margin. Now, even margin is back and it has come at a 5-quarter high. For the first time after several quarters, margin has come in about 25%. And on the volume front, there has never been any complaint as far as Eicher Motors is concerned. Volumes in the Q3, Royal Enfield volumes were up 21% year-on-year. Even commercial vehicle volumes have increased by 24%. And with all-round performance, revenue has increased by 23%. EBITDA too has seen an increase of 30%. And margin has come in at 25.5% versus 24.2%. And after several quarters, EBITDA growth has been higher than revenue growth and the volume growth for the company. What's going forward? In Q4, company is saying that trend will continue, strong trend will continue. And even in FY27 for the industry, the growth is seen in high single digit. And on the market share front, company continues to gain the market share in the mid-size segment. And the exit market share in the mid-size in Q3 FY26 was almost 89%. And considering all the factors, I'm going with green for Eicher Motors.
Okay, all right. Sir, thanks a lot. And they're going ahead and increasing capacity as well. So great news for, buyers as well. Thanks a lot for that. Well, let's go back to Vinny. She's having a busy morning. Vinny, tell us about Jubilant Foodworks as well as United Breweries. What a combination.
Absolutely. I think you should order both for me this afternoon. I'm waiting for that. But Jubilant Foodworks, good set of numbers come from the company. Strong operational performance. So overall, when you're looking at the EBITDA margins, around 100 basis point, more than that expansion in terms of EBITDA margins on a year-on-year basis. Overall, revenue seen a growth of 12%, profits a 31% growth there as well. Domino's like-for-like growth, that's come in at 5%. And do not forget, this is the 8th consecutive quarter that we're seeing positive like-for-like growth for Domino's. Popeyes also has seen a record high double-digit like-for-like growth. So good performance coming in from their brands as well. And overall, green expected here. United Breweries, again, good numbers come from the company. Strong internals that have come in. Revenue growth that has come in at 3.6%. Volumes, bit muted. Negative 1.3% is there. We're seeing a bit of a decline there. Pricing mix and cost initiatives have led to an improvement in terms of gross margins by around 200 basis points. Overall, EBITDA margins have seen a sharp improvement of more than 300 basis points. 10.9% is now what the EBITDA margin stands at. There is obviously a bit of an exceptional loss that's come in this time of 18 crores versus last year also there was an exceptional loss of 25 crores. So watch out for that. And overall, operationally, performance has been strong. Top line a bit muted, but nonetheless a growth that we're seeing over there, and all in all, green expected here as well.
Okay, all right, Vinny, I know I've got a lot of messages that have already come in. If you're going to be buying pizza as well as beer, and Vinny's part of the plan, a lot of people want to be part of it. So, we'll deal with that a little later, Vinny. You're in demand. Thanks a lot for joining in.
Thanks.
Well, let's hop across to Sudarshan. Sudarshan, BHEL as well as Ather, some supply coming into the market. Tell us more.
That's correct. So for Ather Energy, we are expecting a block deal of around 1.92% equity. It's going to be a clean-out trade from National Investment Infrastructure Fund. And this 1.92% equity is worth around 534 crore rupees. And price range is seen at 706 to 728 rupees per share. That would be a discount up to 3% to yesterday's close. But because of the clean-out trade, I'm going with Ather Energy. As far as the demand for Ather Energy is concerned, vehicle demand, it remains strong. It continues to be at the number 3 as far as the electric two-wheeler is concerned. For BHEL, I'm going with red. Government is looking to sell up to 5% equity via OFS, and base size is 3% equity. And if it exercises the green shoe option, there would be another 2% equity. And this 5% equity is worth around rupees 4,420 crore, and floor price is rupees 254 rupees per share, which is a 8% discount to current market price. And for non-retail portion, OFS opens today, and for retail portion, OFS opens tomorrow. And because of the 8% discount, I'm going with red for BHEL.
All right, thanks very much so for that. That's BHEL for you. Aurobindo, of course, was the top nifty loser yesterday. Ekta is here with more details. Ekta, morning.
Morning. Well, the news is that their Unit 7, which is basically their Jed Sherla unit, has been inspected by the US FDA and issued 9 observations. It was inspected from Jan 28 to Feb 10. The company, however, has categorically said that the observations are procedural, and this is what they have indicated about the 11 observations they just got a few days ago for their UGR Unit 3 as well. They had mentioned this in their conference call, that those observations are procedural and they should see resolution on that. Now, remember that it also reacted to its numbers and conference call takeaways yesterday. So brokerages have come out this morning based on earnings. CLSA maintains an outperform with the target price raised to 1370, and DAM Capital has a buy with the target price of 1513.
Got it. Okay, all right. Thanks a lot for that, Ekta. Well, I'm looking at Torrent Power, and those numbers, actually, there was a bit of an improvement. If you're looking at the top line, a mild improvement out there. But what was heartening was that the margins, that came in at around 20%. That compares with around 17%. And the net profit number as well looked quite good. The Q3 really was aided by increase in contribution from the gas-based power plants, the improvement in license as well as franchise distribution businesses, and also the improved operational performance from the renewable energy segment. So put that together, explains why things looked quite good. The operational capacity is estimated now to grow to around 10.6 gigawatts. So all in all, the numbers look quite good. Operational performance good. Commentary as well fairly okay. Going with green on that one. Well, let's do a quick recap of all the top stocks we discussed. The stocks with positive news flow: Titan, Apollo Hospitals, Britannia, Aichi Motors, Jubilant Food, United Breweries, Torrent Power, and Ather Energy. While stocks with negative news flow include BHAL and Oro Pharma. That's about equities. Well, let's turn our attention to the commodity space. Manisha Gupta joins in early this morning to tell us what's going on there. Hey, Manisha, morning.
Morning, Nigel. Thank you for that. I'll start with gold, which is trading firm, and this is on the back of weak or softer U.S. retail sales numbers. The markets do believe that a rate cut is not too far away. And then there is focus, of course, on the U.S. payroll data that comes in today and the inflation numbers from U.S. that comes in on Friday. Gold is holding well above $5,000 an ounce. What has seen a bit of a profit taking, though, has been metals, including silver, which is just about holding $81 an ounce. With China heading to Lunar New Year holidays, you've seen buying from China kind of decline. And then there is rising inventories in major trading hubs across LME, CME, and Shanghai weighing onto the markets. So copper is just about holding $13,000 a ton. Remember, it did hit an all-time high of $14,500 in the last week of January. Aluminum and zinc can also have come off its three-year highs. What is holding firm really is the crude oil prices, though, because even as the U.S. and Iran talks continue, the U.S. is building military presence in Middle East, saying that if the talks fail, this is going to be the next step there. The street is also looking at the U.S. natural gas inventories continue to declining. The cold weather has boosted heating oil demand in the Western world. So whether it's about crude oil, crude products, almost everything seems to be doing positive.
Thank you very much for that, Manisha. We will get into a break. On the other side, we'll get chatting with the management of Balrampur Chini on the other side on their Q3 numbers. Stay tuned.
Welcome back and hope you're having a good morning. Well, Balrampur Chini Mills, that's the first management on the show. It reported actually a strong set of numbers in Q3, driven by higher volumes as well as realizations in the sugar and the distillery division. To help us out with the past quarter and more importantly, the way ahead, we're joined by Mr. Pramod Patwari, the CFO of the company. Hi, Mr. Patwari. Always good speaking to you. It's been a while since we chatted. Well, let's take a couple of aspects out of the way first. Sugar production actually is relatively lower against the bumper crop that was expected earlier. Could you tell me, what's the outlook on sugar prices from here on?
Yeah, against the initial estimates of sugar production, currently we are of the view that gross sugar production can be in the region of around 32.5 million ton.
Okay.
And on the basis of ethanol tender which had happened, looks like diversion will be around 3.5 to 3.7 million ton. On that basis, net production is expected to be around 28.8 million ton in our view. Against this, taking into consideration the 4 lakh tons of export contracts which had already happened and the domestic consumption, we see a total utilization of inventory through exports and domestic consumption to the tune of around 29.2 million ton. So this will result into a slightly eating away from the opening inventory of 5 million ton. So currently we are selling sugar in UP in the region of around 41 to 41.5 per kg. And this is during the midst of a peak crushing season. So looks like as far as this season is concerned, we have already seen the bottom of sugar prices. From here on, we are not seeing any runaway in the sugar prices, but the trajectory will be positive only.
Okay, got it. The other point, sir, is that, higher sugar cane or the SAP impact will be seen from the next quarter. In that case, how do you maintain the profitability in quarter 4?
So we have seen an increase in SAP by 30 rupees per quintal in UP. So the impact of this is normally seen over 2 financial years. Around 30 to 35% of impact is seen in the ongoing financial year, which would be FY 25-26, and the rest will be seen in the next year. But we at Balrampur, we are sensing an increase in the cane availability of say around 5 to 6%. This will help in absorbing the fixed overheads better. We are also hopeful of achieving a slightly better recovery, maybe around 8-10 basis points. This will also help in arresting the cost of production. On top of it, as we have said, that there will be an increase in the sugar prices on a comparative basis, what we achieved last year. All this will help in largely mitigating the impact of the sugarcane price increase.
So what about on ethanol prices? Ethanol procurement prices have not gone up, and that is putting pressure on your distillery margins. What is the outlook on that? And at this price, considering that, the sugarcane SAP price has gone up, as you said, by 30, does it still make sense to divert towards ethanol? What is the mix going to be?
Yeah, you are right, Rima. We have seen an increase in FRP by 16.5% in last 3 years. And against this, we have not seen any increase in the ethanol prices. This is really surprising. But in the overall scheme of things, we at Balrampur still believe that as far as this season is concerned, it is better and wiser to make use of juice heavy as well as B heavy route ethanol production. Going forward, revision in the ethanol prices will be extremely crucial to decide whether anyone will operate ethanol facilities under sugarcane juice or not.
Okay. All right. Let's focus on the way ahead then. The PLA. Could you tell us, is there a strong market for the product that you're going to be launching? And I think you're looking at quarter 3 of FY27. So what kind of revenue potential do we see for that one quarter in FY27? And then FY28 onwards, how much can PLA contribute to your entire basket?
Yes, Nigel. We are looking at quarter 3 of FY27, wherein we are expecting the commercialization of PLA to happen.
Yes.
This will be the first time that we will be doing this project. So I really don't know how much time it will take in stabilization. It can happen in 1 month, it can happen in 2 months. So for FY27, we are not building up a very large revenue from the PLA segment. But for FY28, we are hoping that our entire capacity would be utilized.
FY28. Okay. And what is the optimum levels of revenue? 2,000 crores, right?
That's the peak revenue potential.
FY28. Got that. And the market is there, right, for this product?
Yeah, market is there. See, a lot of imports are happening as of now. It is very difficult to quantify because the PLA is coming in knit form as well as in the finished form.
Okay.
So HSN-wise code capturing data is not happening as of now. But we are in touch with more than 150, 170 customers. For institution, we are in touch with railways, temples. So we are hopeful of achieving our capacity. And the most interesting part at this point in time is PMO has initiated a development of sachet for pan masala and gutka. So that is very encouraging.
Yeah. Right. Pramod, hi. Morning. Prashant here. My colleagues have asked all the serious questions, so let me ask a non-serious question.
Yeah.
You saw that headline? GLP-1 drugs are going to save the airline industry some $700 million. Did you see that? There was a headline.
No.
Basically, people are going to lose weight and airlines are going to be able to carry more people. I think that was the interpretation. I'm talking about the Ozempics and the Mounjaros of the world, right? There's also research now, more and more research which is coming in, which shows that wider adoption of all these GLP drugs. By the way, Mounjaro is already the top-selling drug in India, medicine in India, leads to some 60-65% reduction in sugar consumption.
Okay.
Sugary stuff. I don't know. It all seems like far into the future and that kind of stuff. But have you guys seen this? And what is the institutional sales for you at Balrampur?
So at a country level, the institutional sales is around 65%, and the direct consumption in the form of household consumption is around 33%.
Right.
So, Prashant, just to add something on this kind of news, we have seen this kind of news all along, and we continue to survive in this kind of environment. Population with a increasing population, increasing in the prosperity of the people, increase in the change in the lifestyle, economic development. So there will be some tapering of demand in the form of health consciousness, alternative sweeteners, and the stuff
on the institutional side, which is 65% of your business, there has been no demand. There's no. I mean, it's running. It's doing well, right? There's nothing.
So we are still sensing an increase in demand to the extent of, I would say, 1.5% on a CAGR basis.
Okay.
In spite of all these adversities.
Okay, got that. Thank you very much, Pramod.
Thank you.
Sorry for that googly off tangent, but I thought should ask you since we have you. Appreciate it. Well, I think we'll take a quick commercial break here. We're going to come back in just a bit from now, and we will connect with Rahul Arora, CEO at Ashika Institutional Equities, for some fundamental stock conversation. Stay tuned. Coming up. I just want to quickly point out what the GIFT Nifty is starting at this point in time. And it's about, 73, 74 odd points in the green, 26,060. Rahul Arora is with us, CEO at Ashika Institutional Equities. Rahul, good morning. And I guess I should say congratulations are in order. So after a long stint at Nirmal Bang, you've moved on to Ashika. So wish you all the best of luck. Markets, of course, have started 26 on pretty much a frenzied note, at least globally. Here it's been more slow, not so slow in the last 7 days with India, US, and all these other things which have come in. But what's your sense, Rahul, the broader, sort of bigger view for markets from here on?
Good morning, Prashant. Thank you for having me on and appreciate the wishes. Thank you so much for that. So I think, Prashant, if you look at it, see, at the end of the day, liquidity drives markets. We have domestic liquidity and you have foreign liquidity. Now, let's look at FY27 as a case point. We're expecting consensus earnings at about 12-13%. So if I'm an FII looking into India at that 12-13%, I'm starting off minus 3-4% on currency depreciation any which ways. I think the fisc has been projected at 4.3% for next year. And the tax projections are a bit somber as well. So there will be a slight concern on that rupee depreciation at the back of the foreigner's mind. Add to that about 12.5% LTCG, and maybe 1.5-2% inflation in their country. You're basically talking about, if you're expecting the market returns to be same as earnings growth at 12-13%, you're talking about post these adjustments about 5.5-6%. I'm getting the US 10-year at about 4.5%, which is a very safe asset. So just for 100 basis points, why take the trouble in investing in a market like India? So that could be one school of thought as to why it's been so difficult for India to attract FI flows for quite some time. And that same logic, Prashant, would hold for DIIs, because you just replace the rupee depreciation by your domestic inflation. And then you have fixed deposit rates at about 7%. Most of the people would be taxed at about 20%. So you're talking about 5.6% post-tax on a fixed deposit. Again, for 100-150 basis points, the spread is not that much. So I think, Prashant, for a convincing case for the markets to make a new high and sustain that, we need to get into a situation where the expected returns of the markets are at least 20%. And that probably won't happen unless you're going into a fiscal year with 16-18% kind of earnings growth projections, which I still think we're a little way of a distance away from. So I think that volatility that you spoke about with respect to the STT announcement and then the trade deal positive, I think that's behind us. We're looking ahead to earnings now. In a couple of months, we'll start looking to the heavens for projections on the rains and see how that goes. But I would think that this would be another year of consolidation, Prashant. It could be a very tough year. You could see the Nifty consolidate, say, between 24.5 to 27.5. That's not to say you won't make money, but it'll just be another very challenging year because both domestics and FIs have other asset class allocations. And I don't for a minute buy the theory that people are going to stop investing in gold and silver because of what's happened in the last month and a half. I think those are still very viable alternate asset classes.
Okay. All right. Hi, Rahul. Good morning. Good to see you in, and all the best in your new role. Seen you going from strength to strength over the years. And I only wish you the best, Rahul. And we look forward to interacting you more often as well. Since you mentioned gold and silver, let's talk about Titan. We'll be having the management shortly who will be joining in on the show. What do you make of the numbers? Expected to be good. They were pretty good as well. So if you want to give us your take.
No, so thank you for your wishes, Nigel. So I think I've been a believer in Titan for a very, very long time. I mean, we've spoken over the years. See, these kind of stocks won't come cheap, Nigel, when you're talking about 10, 11% kind of growth rate, which is very, very difficult for consumer staples to give you at this point in time. I'm sure you've looked at the numbers for most of the consumer staples numbers that have come out so far, barring the foods. If you keep Britannia, Tata Consumer and Nestle aside, the rest are all giving you between 3-5% kind of volume growth. So I think in that backdrop, if you have a Titan that's giving you strong double-digit growth, I don't see why you wouldn't want that to be part of your portfolio. Of course, valuations will never be cheap, but I think it's not just Titan. Nigel, I would sort of take that discussion further to other consumer discretionary names as well. I'd still be a believer in names like UNSP. United Breweries, I think today should react very well to its numbers. It was a very, very strong set of numbers overnight. Hotel stocks have been doing extremely well. You're looking at 8-9% kind of growth in ARRs. Occupancies are holding in that 65 to 75% range, depending on which hotel you pick up. So I think Titan, liquor stocks, hotel stocks, aviation stocks would be the preferred names because you're struggling to get volume growth in frontline staples. And there as well, I think if you look at most consumer staples, bar Emami and ITC, they're still trading at between 43 to 50 times on a one-year forward basis. So if I'm getting a 10-12% kind of growth or even higher than that in Titan, for me, it's a no-brainer to be adding it at any corrections, if at all you get them.
Do you think QSR is going to make a comeback in a more durable way this time? Jubilant FoodWorks say like-for-like growth was about 5%. Is that good enough? And we've seen so much consolidation in this space, Rahul.
So, Rima, when Swiggy and Zomato came out, I actually thought these would be enablers for the business. They've actually turned out to be disruptors for the business. Now, I know there was a day last week where you had all the QSR stocks up between 5 to 15%. But we have to keep in mind that a lot of these bases, barring Jubilant FoodWorks, are coming off the same store sales growth that you saw for this quarter, are coming off very low bases. In fact, Jubilant was the other way around. It came off an 11% like-for-like growth, and that has tapered down into the low single digits. So I personally think, Rima, I mean, if you look at a McDonald's, for example, you have the most expensive item there is your chicken Maharaja Mac, which is 250 rupees. If you look at a pizza, decent size, you're talking about 500 rupees at least for a chicken pizza. Now look at the options that Swiggy and Zomato have given you in those price ranges across cuisines, not just Indian and more. So I think there is a challenge. The other thing, especially for dine-in QSRs like Burger King, McDonald's, etc., is that barring the last 6 months, movies have been very soft in India. So the footfalls into the malls haven't been that good, which hasn't translated that much into growth. So Jubilant is still coming to you at 65, 70 PE. McDonald's is close to about 100 PE. A lot of these have assets, in countries like Indonesia, Sri Lanka, Turkey, where things could go wrong at the whim and we won't even know it. It'll just show up in the earnings. We'll be talking all about it, but it may just surprise us on the negative side. So I would stay clear. As I was telling Nigel a while earlier, if I have to play food, I would probably still play through names like Britannia, Tata Consumer and Nestle. I still think the times ahead could be relatively challenging, both from a growth as well as from a valuation standpoint for the QSR sector.
Okay, all right, Rahul. Time for a beer, a pizza, or whatever you choose. Thanks a lot for joining in. Catch you soon.
He goes for expensive things, right? Like Titan, beer. He's not going for the 200 rupee Maharaja Mac.
Okay.
It's a premium play.
Rahul, you know what's on demand then.
Let's hope my bonuses continue.
Catch you soon.
Talk about that, but thank you so much, Nigel.
Okay. Catch you soon for the pizza or the burger. That's on me. The other expensive stuff on you. All right. Time to slip into a short break. Come back. We'll get you pre-open rates. We'll also be joined by Vishal Manchanda of Systematics Group to discuss developments in the pharma sector. Also, our technical experts will be joining in. So stay tuned for all of that. Welcome back. Hope you're having a good morning. let's hop across to Sudarshan. He's in to tell us about the MSCI rejig announcement that came in earlier today. Morning, sir. Take it away.
So early in the morning today, MSCI has announced some of the changes to its major indexes. In the MSCI Standard Index, 2 stocks will be added while 1 stock will be deleted. And because of this rejig, India's weightage in MSCI Standard Index will remain steady at around 14.1%. But because of the underperformance that we have seen in the broader markets, there have been several changes in the small cap index. And because of this, total number of stocks in small cap index will come down to 480 from 508. And these changes would be effective February 27, 2026. Now, in the MSCI Standard Index, 2 major inclusions. First one is AB Capital, and because of this, likely inflows we are expected to see of $257 million. Another one is L&T Finance Holdings, and that also may see inflows of around $238 million. In MSCI Standard Index, 1 stock that will be excluded is IRCTC, and outflows are seen at around $142 million. Coming to MSCI Small Cap Index, some of the major inclusions are Prima Energies, NSTL, MCure, GSW Cement, Ashapura Mine, Canada HSBC Life and Thyrocare Technologies. In exclusion list, Gokaldas Exports, Sterlite Tech, KNR, Jkumar Infra, VRL Logistics, Ashoka Bilcon, Anup Engineering are some of the major names, though that would be excluded from MSCI Small Cap Index. But as far as changes are concerned, are largely in line with analyst expectations.
All right, so thank you very much for that. Changes in line with expectations, as Sud points out. Sudarshan Sukhani is with us, and we also have Mitesh Thakkar with us with what they'd want you to do in terms of specific trading strategies in stocks. GIFT Nifty implied open is another 80-85 odd points. Yesterday, of course, I mean, we pretty much opened and closed around the same kind of levels. Mitesh, you go first. Any significance of that? And what's the trade as we open on indices first?
I think, very clearly, yesterday, in fact, a couple of days back, I was talking about that if we don't break 25,500, it is likely that the bounce back will extend to about levels of 26,000 and maybe even 26,300. So yesterday, we made a high near 26,000, and I think today also we open around that level. To me, it's an important level. There's a couple of intraday pivots placed over there. It's also a round number. So I would be inclined to take some profits around those levels, but the idea is that the directional bias on an hourly, 2-hourly, 4-hourly chart basis is up. So I eventually believe that even if you get a 100-point lift from there, buy back longs again or get into fresh longs if you don't have. And I think this time we might retest this 26,250, 300 zone. So positive in the short term.
Positive in the short term. Got it. Thanks, Mitesh, for that. Well, let's get Sudarshan as well into the discussion. Sudarshan, what do you make of it? A 1,000-point move in a matter of a week, and the shots have got squeezed out. More to go. How would you trade the index?
Yeah, good morning. Well, we've got most of this move, and luckily, I think the time has come to take profits and step aside, at least for the day. That doesn't mean this will be valid tomorrow or day after. But today is probably a day when I would like to take profits. I would say, okay, we'll see where the Nifty goes. Remember, we are also going to cross maybe that 26,000 threshold. So perhaps the markets could feel nervous there. In any case, a big rally is a very good reason to take to step out and bank some money in. So today the trade is exit your long positions and do nothing else.
Exit longs and do nothing else. Sudarshan, pretty clean and straightforward. In terms of specific stock trades, Sudarshan, what would you say?
Well, I have Dabur as a buy with a stop under 505. Muthoot Finance with a stop under is a buy with a stop under 38.10. I have Alchem is my final and third buy, stop under 56.65. I also have an intraday short or even a positional short, whatever you like to take. That is persistent with a stop above 59.70. The shorts are coming after a long time.
Okay, all right. Got that, Sudarshan. Mitesh, what about you?
Yeah. I also have an all-buy list. The idea is that the directional bias is on the upside, so we'll trade more with long bias. Adani Ports is my first recommendation. Recommend a buy here with a stop at 15 or just below 15.25, and 16.10 on the upside is the near-term target. Then Astral is another stock which I like. Keep a stop below 1500. Look for targets of around 1595, 1600 on the upside. A buy on Eternal. It was a buy yesterday as well. I think today is a fresh buy. So people who have longs, I think, can trail the stop losses. But now recommending a buy with a stop below 300 for The next target is 310. And IRCTC is something which gave a reversal. It's still below its 34-day exponential average. So in case it crosses that, and it's only about a point below. So buy about 639, 640, keep a stop at 625, and a target of 670 is what I recommend.
Got it. Okay. All right. Thanks a lot for that, Mitesh, as well as Sudarshan. Well, let's focus on a couple of names then from the pharma pack. We have Vishal Manchanda from Systematics who joins in. Hi, Vishal. Good morning. Good to see you in, Vishal. I wanted to focus on Auto Pharma. Yesterday, the stock got clobbered. And now, in fact, we have the Unit 7 as well, observations that are coming. What do you make of it, and how would you approach the stock? Yesterday, I think it was down close to 7%.
Right. I think we are seeing two facilities getting inspected back to back. So it was Unit 3 earlier, and kind of they got observations there, and likewise Unit 7 is also a large facility for them. But I think that's part of being in the US business. You will keep getting Form 483 observations, and I think that's the way the US business usually would turn out. Maybe it's you can't really comment on how the observations are and what impact these observations would have. But I think given Aurobindo's track record in terms of managing their facilities for so long, they have never seen a. So I think they at worst, I think they've seen OAIs in their history, and I think large part of the growth that Aurobindo is looking at in the next 1 year is going to come from their Pen-G business. US probably is not that important imminently for them.
Got that. Vishal, hi, morning. Can you give us an overall synopsis, analysis of how the Q3 earnings season has been so far for the Indian pharma, healthcare, hospitality space? What were the big trends that stood out, which you can take forward?
So you mean the pharmaceuticals or the?
No, across the different bracket segments for pharma, for in the domestic side, for healthcare.
Right.
Hospital, yeah.
So I think on the pharma side, specifically a few companies have done well on the IPM business, Indian pharmaceutical markets. So Sun, Ajanta Pharma, Dr. Reddy's, and Zydus. These are few names that have done extraordinarily well, especially Sun Pharma, which has grown 16% on a YoY basis. While I think many of these companies have also been dependent on acquisitions and licensing for bringing that growth. Apart from that, I think US business largely has been kind of a mixed bag. So a few companies have outperformed expectations, while a few have underperformed. Like Cipla has underperformed expectations. Zydus did better than expectation. Even Reddy's did better than expectations on the US business. But I think US is probably, if you look at the near to medium term, that may be on a downturn. The US generic business will be on downturn for most names.
And on the India-US trade deal, because that is contingent on the investigation of under Section 232, whether we get that preferential treatment for Indian generic companies. How are you? Yeah, go ahead.
I think so. Right now we are exempt, and then I think the 232 investigations. So we have been hearing on that for a while. So that remains an overhang. But if you look at generics, and if you look at US, so I don't think US kind of has an option, but has no other option but to kind of keep outsourcing generic drugs from other countries. They can only diversify their sourcing, like reduce their over dependence on India. Tariffs are unlikely to serve any purpose here. It's going to be a long-term mandate that US has to execute in terms of de-risking their de-risking in terms of their dependence. So India, probably they're over-dependent on India, they're over-dependent on China. But that's going to be a gradual process through which they can manage their risk.
All right, we'll leave it there, Vishal. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV18. I mean, I think the pre-open has kicked off, and I think we're coming to an end, actually, of the pre-open session. So it's 90 points higher. If you can just quickly, we do this towards the end of the pre-open and actually before markets open, but I guess we can, if you have the stock stacks in terms of the stuff we addressed since the morning, if you can pull those up. And BHEL down 5%. There is, of course, the Aether block there. Torrent Power is up about 1.25%. We've got Aether is just absolutely flat right now. iShares is up about 2.7 odd percent. Britannia is starting about 2.5 higher. Jubilant Food, of course, 3% in the green on numbers. United Breweries is up about 3%. Stocks at about 1,670. And Apollo Hospitals 2.5 higher. Numbers are pretty good. Aurobindo, top nifty loser yesterday, but I mean, we just spoke with Vishal there. So about 2% higher, some recovery. Titan is up about 2.5 odd percent as well at this stage. So that is the sort of picture and what's coming through. I mean, the Aether block, I'm not sure if everything has gotten done, but shares worth some 233 odd crores have changed hands. I thought the amount was perhaps slightly larger in with the information that we put out yesterday, but we'll just confirm that in just a bit from now. But the stock's not moving, and it's kind of flattish. It's been done. I mean, this particular block, 230 odd crores, done in the block deal window in that sense. Maybe, the pre-open has ended, and if you can put up the wealth guys, the wealth management stocks, right? I mean, just out of curiosity, because last night in the US, the wealth stocks sold off, wealth management stocks, Charles Schwab, etc. Nuvama is down about 1.25%. I'm not sure if this has necessarily got to do when the transmission is so fast from sometimes it is. But this is a niche part of the market in the US which got impacted because of AI anxiety. 361 perhaps is another name which we could put out. Motilal, of course, does a bunch of things. But 360 is, of course, pure wealth. I mean, not really. So it's, I guess, if it really was the AI risk to wealth firms, as we saw in the US, it should show up at least in 2 or 3 in these names, at least the pure play wealth names in that sense, which is not the case. So that is the picture on some of these names right now. So the pre-open, as I think, is settled. And we have ended absolutely, actually it's about 60 odd points higher, which is not bad at all. 25,997 is where we are at. So about 60 odd points in the green. So we're at the upper end. I mean, I think we'll open around yesterday's high, which is the first resistance from here is about 26,020. And we got almost to it. This morning we are again getting very close to it. Let's see if that acts as a bit of a resistance, or the market's able to take that out. But the close, the open and close were pretty much around the same levels yesterday for the Nifty. Typically that signals a bit of exhaustion more than anything else. So we'll see if we are able to latch on and hold on to these gains. But in any case, as I've been saying, I think a lot of the sort of focus is really going to be on individual stocks with regards to numbers, earnings, etc. I think we can get to the 9-10 calls. Sudarshan and Mitesh are with us. Sudarshan, what would you say? What would you do?
It's Alchem. Buy Alchem with a stop under 56.65.
Okay, Alchem is Sudarshan's pick right now. It is up 0.5%, 30 rupees higher. Mitesh, what about you?
I'll go with the buy on Eternal for targets of 310.
Okay, Eternals for targets of 310. I think Eternal, of course, was one of the top. Eternal, Swiggy both did very well yesterday. Mitesh, just a quick word. I don't know if BSC, we can pull it up. Any thoughts there? Again, it was a big mover yesterday.
BSC, Prashant, I personally hold and I have interest. A good breakout with a gap into all-time highs, for me, I think that's a very positive setup. I have a minimum target of roughly around 3250, but that is close. But the extended target, could be very interesting in the range of around 3750, 3800.
Okay, all right, Mitesh and Sudarshan, thank you very much for joining us. Well, Jubilant Foodworks is what I want to focus on. Vinny's here with us to revise the numbers and, of course, what the street made of it. Vinny, morning.
Hi, morning. So yes, overall good set of numbers. Operationally, a good performance that's coming from Jubilant FoodWorks this time. Revenue growth of 12%. Margins have seen an expansion of more than 100 basis points. Profit growth of around 32%. Domino's like-for-like growth, that's seen an improvement. That's at around 5%. An eighth consecutive quarter that you are seeing like-for-like growth that has been positive for Domino's. Popeyes also recorded a double-digit like-for-like growth in this quarter. So good performance overall coming in there. Now, what's the street saying? What are analysts highlighting? Jubilant FoodWorks, for Jubilant FoodWorks, Jefferies is maintaining a buy call, target price of 850 rupees per share. Even CLSA is maintaining their whole call and the target price is 505 rupees per share, while HSBC also continues to maintain their buy call, target price of 700 rupees per share. And obviously the management has given a like-for-like growth guidance of 5 to 7%. So that is going to be key in the next couple of quarters to watch out for as well.
Okay, all right, Vinny, thank you very much. For that, Jubilant Food is up on your screen. Well, let's just move on to the next one, right? Eicher Motors and Tata Motors commercial vehicles. Sudarshan is here with details on these two. So over to you.
So Eicher Motors in the pre-opening session is up almost 3%. It's one amongst the top nifty gainers. It's on the back of strong set of earnings that company has reported for Q3 FY26. Both on the volume front and the margin front, company has been outperforming the peers. Margin has come in at 25.5%. It's a 5-quarter high. On the volume front, also Royal Enfield volumes are up 21% year-on-year. Even commercial volumes have increased by 24%. And because of sharp increase in the volumes, company has seen an increase in the revenue by 23%. EBITDA has increased by 30%. And margin has increased to 25.5% versus 24.2%. Going forward, also, company is saying that in the Q4, strong momentum will continue. And even in FY27, industry is expected to see a high single-digit growth. Coming to Tata Motors commercial vehicle, it has seen a big order for the Indonesian arm from the Indonesian government company. It's for the 70,000 vehicles, and 70,000 vehicles will consist of 35,000 vehicles of Yodha pickup and 35,000 vehicles of Ultra T.7 truck. Now, just I have done the rough calculation. Rough calculation suggests that the order is going to be in the range of 7,000 to 9,000 crores. So it's a huge order. And on the back of this, in the pre-opening session, the stock is up almost 3%.
Thank you very much for that. Mitesh, Titan is going to be a big mover today. It rallied yesterday. It's up another 2% in pre-open. Is there a trade?
I was looking at this stock yesterday because it made a fresh high, and I was wondering, if it's slightly stretched and maybe a pullback will help me buy. But I think today's morning would suggest that may not happen. I'm looking at a target of around 4,500 over here, so still positive on Titan.
Got it. All right. Thanks a lot for that, Mitesh. By the way, a few more stocks actually are doing quite well. HEG, actually, those numbers look quite good. I think the stock is up close to around 5.5% as we speak. So big up move is what we are seeing on that one. Numbers look pretty good. Good growth on the top line. The management had told us that actually they're not expecting any kind of big move on realization. So it appears utilization levels have improved. And the margins have clocked 20%. Remember, it's a far cry away from the 60-70% that they did at peak of the cycle. But the management has told us that don't hope for that 60-70%. But some improvement is warranted. And it appears the street has taken note of that as well. Net, good set of numbers. And the street has acknowledged that. But Prashant, we're bracing for a positive opening today. The Nifty is up. And I tell you what, if we can end somewhere close to where we're starting, the bulls will feel very, very good because this has been a bit of a resistance zone.
Well, absolutely. And I think the first rate should be coming in terms of where we are at. So 25,997, about 60 odd points higher. The first headline level rate should come in, and then we'll dive into individual names because a lot of it, of course, is about specific stocks on the back of earnings and everything else. So what do we have? So just about starting up and starting out, specific pockets, large moves, right? And we'll focus on those in about 2 minutes' time. So 25,970, so it's up but not holding straight away. 25,960, so it's up about 0.15%. Bank Nifty is kind of flattish, sideways, 60,555. The mid-cap index is about 50-point change. So again, absolutely flat. Small caps perhaps should be something similar. Broader market breadth, 2:1. It's right out of the gate. So I guess give it some more time for things to settle. But what is trading right now, it's more up than down. The Nifty heat map up next should give you a quick sense of where we are starting before we go any further. What do we have? 25,976 and 35, 36 names are up. Aisha, Apollo Hospitals, Titan on one end. There is ONGC, Coal, and Hindalco, which is the other end. So resource companies losing a little bit. On the other side, you've got some of the consumer names which are up and about 40 points. So it's not a bad start. Rima.
Well, it's all about the earnings reaction. So right on top is Aisha Motor. Stock is open with a gain of 5%, gap up and gone straight away to a fresh 52-week high, 76.50. Strong numbers. Royal Enfield volumes were known, expected to be good, but the street is happy with the margin performance this time, as Sudarshan was talking about. Apollo Hospitals, again, a good set of numbers. For Titan, jewelry sales have been strong, in excess of 40%, but they managed to increase the margins also, and the street is excited. Max Healthcare is higher in trade. You've got strength in a couple of the other consumption names. So Nestle, Tata Consumer. Eternal was a 5% mover yesterday on the way up, seeing some follow-on buying, a gain of about 1% to begin trade with. On the way down, Hindalco, Coal India, ONGC. HDFC Bank has been a bit of a drag. This week, HDFC Bank is down 1.25% from the start of the year. It's lower by nearly 6.5%. Quietish start, holding on with a positive bias, but it's largely about the earnings reaction when you look at the frontline stocks.
Well, that's right, Rima. A few stocks actually deserve special mention. You have HEG, the stock is flying away, doing pretty well in today's trading session. I think it's seen some bit of profit taking from the top. Yeah, that one comes up for you. But Ashiana Housing, not a very large company, 3,500 crores. That's up close to around 15%. They came out with their set of numbers, so that's one's bucking the trend. All cargo terminals as well is holding with solid gains in today's trading session. So good move is what we're seeing out there. TVS Supply Chain. Now that one's moving on decent volumes. That's up close to around 6% as we speak. So good move out there. On the flip side, you have Som Distilleries. Little, tipsy this morning actually. That stock in fact is down close to around 10% as we speak. Som Distilleries should come up for you on the screen. That one's lower. You have Skipper as well. That's actually corrected a fair bit from the recent peak. They were talking about a longer runway, but it seems that stock is coming for profit taking. I recall it at around 550 rupees now, at around 380 rupees, falling on decent volumes. And Lakshmi Dental as well. That's the other stock in there that's actually come in for some profit booking. So headline index is now back towards the high point of the day at around that 26,000 odd mark. But individual stocks doing a thing of their own. Karnataka Bank is another stock that's down close to around 3%.
Yeah, no, absolutely. By the way, the top two volume-led gainers in the NSE are both around 7,500, 7,600 rupees. That is Aisha, 7,700, and Apollo at about 7,550. So 5% and 4% respectively, and a tremendous amount of volumes right now. So, I mean, a 7,000 rupee stocks trading, a 250,000 shares straight at the word go. Impressive. HEG is up about 3%. I think we mentioned it. Tata Motors Commercial Vehicles, Sud mentioned it, 2.25%. Motherson, the management joins us in a bit, 3% higher. Britannia is up 4%. Stocks at about 6,100 odd. Naveen Fluorine, big day, I think day before it was, or yesterday, 3% higher. HBL is up about 2.33%. Sansera has had a one-way move last three sessions, 21.20 or so on Sansera. And by the way, I'm only highlighting things with large volumes there is more, but I'm not going there because volumes are a little thin. I think Nigel mentioned Ashiana, which is up 15%. Wakefit is coming up. Okay, Wakefit is up 1%, but it's got large volumes. So that's Iron Exchange is another one, which is up about 2% or so. Market breadth has converged. So this is interesting as we kind of sort of settle down. 1,300 stocks are higher and about 1,150 stocks are lower. And MCX is the top volume-led loser with about a 2% cut. Again, it's a stock which has done phenomenally well. Hero MotoCorp is down about 2.5%, 5,600. Sterlite Tech has had a bit of a crazy move last 5 sessions. It's seeing some profit booking down about 5%, pulling back a little bit. And then there is Kiri Industries and Skipper, which is down 5%. Walkart is down 1.5%. And again, I mean, volume started to thin out pretty fast if you go down the list at this stage. Well, let's bring in our market voice now. Shreyas Devalkar is head of equity, Axis Mutual Fund. Shreyas, good morning. Great to have you with us here. Thanks very much for joining us. Are you watching, by the way, Shreyas, what's happening with this entire AI anxiety hitting various parts of the financial services sector in the US? Or how would you read it? You think the fact that maybe, I don't know, I mean, there are various ways to think about this, right? Maybe here in India, we are not that developed, right, in terms of financial products and offerings, etc., etc. So to get disrupted won't be that easy. That's one way. That's the optimistic view. But you can make an opposite case as well. What is your sense, Shreyas?
See, AI is having impact on multiple things. Obviously, financial services is one of them. But financial services sector is regulated, and there are we have seen this even earlier also. So it's not that a new thing which is happening out in the financial services. When it comes to digital, there are multiple startups which started some time back. Today it is about AI. But broader point here being, since this sector is regulated, there are multiple aspects of risk to be taken into consideration. So one should take it with a pinch of salt on all this development. Most important, in my opinion, as far as Indian markets are concerned, and as far as the earnings are concerned, the IT sector, which has seen a lot of beating during this time. And the impact on them, in my opinion, generally is also baked in terms of when we look at the growth of all these IT services companies, which we are considering around mid-single digit or low single digit. So this is actually factors in some sort of deflation in the revenue growth, actually deflation in the pricing as well, around 2 to 3%. So yes, AI is impacting multiple sectors, but a direct impact so far, in my opinion, is getting more reflected in the IT sector as such. As far as the financial services, I'm sure our Indian IT financial services industry also is evolving. Some of the companies actually highlighted that they are trying to use it to their benefit for reduction of cost. So cost to income ratio. Actually, if you see for multiple years, everyone predicted that cost to income ratio will come down, but actually it never turned out that way. Some of the NBFCs are trying to work more closely on it, and let's hope that we see the benefits somewhere in that as well.
Shreyas, hi, morning. This is Rima here. So yesterday we got the AMFI data for the month of January, and what stood out was one, equity inflows declined 14%, and two, gold ETFs soared 24,000 crore in terms of inflows. I mean, what is your opinion on that? And in the first 10 days of February, is this the trend which has continued?
Any asset class, so it's not about only gold. When it performs, obviously the flows track to them. We have seen the same earlier in mid cap and small cap as well. In 2024 and part of 25, the mid and small cap also got a lot of flows. Actually, in these recent numbers of January, actually these segments are actually getting lower flows than the peak what we have seen earlier. So this rotation are part and parcel. In that sense, gold as a dollar debasement trade is continuing. Even recent data about China, the way they are buying gold, actually, it's one data suggests that they are almost 9% of their reserves in terms of gold. So this trend of the central banks buying gold still continues. And in that sense, gold as an asset class or a dollar debasement trade and the beneficiaries of that as asset class warrants allocation in the portfolio for the investors.
Hi Shreyas, good morning. Good to see you in. I think you have been reasonably positive on the auto space. And then, last year in September when you got that GST rationalization, the stocks did very, very well. How are you all positioned right now on autos? Do you all maintain that bullish stance? And within autos, what do you like?
So in auto post GST, and especially in the recent past, it is about a commercial vehicle CV cycle as well. So there are two aspects to it. So GST definitely benefited among all the sectors where there was a GST cut at that point in time. Auto is the only sector which showed some uptick in many segments, both in two-wheeler and four-wheeler. So we continue to be positive on that segment. Actually, incrementally in the last 2-3 months, the commercial vehicle cycle has improved. Even the tractor numbers are coming out very, very well. So if you see multiple aspects of auto, they are actually doing very good in the recent past, including some of the EV names as well. So as a pack, I think that this various companies are delivering on the product launches as well as the overall on-ground demand. We are seeing in multiple aspects. Only concerns in auto segment remains around the commodity price inflation and whether the industry will be able to pass it on or not. Historically, it depends on, frankly, it depends on how good is the demand for a particular product. And one need to take that kind of view. Even if you see 2016 to 20, overall auto demand was not that high, but some of the company or one of the company, when the product life cycle was good, at that time, despite commodity pressure, they could pass it on. So one need to take such kind of views in this environment. So the only two concerns, as I said, one is the commodity, and the second one being whether these US or European cars will come and will affect the industry. As of now, the way things stand, probably not at a mass market level, but we need to evaluate going ahead. So all in all, we are positive on the sector as reflected in our last month portfolio.
Shreyas, you have multi-asset funds, right, at Axis?
Yes.
So the reason I'm asking this is because I think Rima asked that question about flows, etc. Silver has fallen from whatever 150 to 80. Gold has seen not that much. I mean, 12-13% pullback, but silver is more. So if new money which comes in, how are you allocating? I mean, what is are you in a multi-asset kind of situation?
Sure. So if you look at multi-asset allocation funds, so obviously gold, silver is sizable part of it, right? It varies from 15 to 20, 22% based on the mandate of the fund, in which fundamentally the gold is where the world is.
No. Sorry. You're saying you are you can, in a multi-asset scheme, you can be very overweight on gold, silver, and underweight equities. That's the whole idea, right? And or vice versa. Or yeah, sorry, go on.
Sure. So there are two kinds of schemes. One is the equity taxation, right? And in which you have to be 65% odd in equity. So those kind of schemes, wherein then obviously the exposure to the gold to that extent comes down. While in other schemes it can be higher. Now, in which among the gold and silver, the real trade is about gold, right? And when it comes to silver, it is about more a proxy to it. And actually that trade even percolated to copper and other metals as well. And the arguments you are aware of the way markets are making. The point here is one need to look at what is the, in all the commodities, what is the stock to flow ratio, what they call. So in case of gold, stock to flow ratio is as high as 67. And it varies month after month or year after year based on overall demand supply, but it's over a longer period of time. The point why you track this is the higher this ratio, it's not very easy to increase or decrease supply of that commodity. So in case of crude oil, it is low. In case of silver, it is somewhere around 10. And in case of other commodities, it even somewhere around 4 or 5. So with what is the ability of the industry to increase demand and supply is very important. So broadly, all in all, that's where gold is relatively preferable. Obviously, we have seen very high volatility in silver, and one can look at it based on the relative ratios, which again people track on the gold to silver. But we are broadly more positive on the gold.
Got it.
Thank you, Shreyas, for joining in. Always a pleasure interacting. Moving on now to Apollo Hospitals. That's gaining in trade. They reported a strong set of Q3 numbers. Profits have tripled on a year-on-year basis. Margins expanded. Sunita Reddy, MD of Apollo Hospitals, is now joining in. Good morning, ma'am. Thank you very much for joining in. This is Rima here. Let me begin with the hospital business. Now, your average revenue per patient, ARPP, grew by a massive 11% to 1.8 lakh. Is this kind of a double-digit run rate in this average revenue per patient sustainable? What is your own view? And even occupancy inching towards 70%. When does that happen?
That should happen over the next 2 quarters. What we're seeing is two significant movements. One is that more insurance patients now have access to Apollo. So we've managed to have a very collaborative tie-up with all of the insurance companies. And this has resulted in an improvement in the volumes coming from insurance. So there was an extra 8% volume increase from insurance with a 20% revenue increase. So this will continue. And with this, we should be able to get higher occupancy metrics. Moving on to your question on ARPP, if you look at the 11% has come from an intentional case mix improvement. So we've really moved up in terms of clinical differentiation, where we've looked at the high-end work, and I think with insurance enabling patients to enter the Apollo system for robotics, for transplants, improvement in cardiac work by 20%, onco work by 18%, orthopedic 17%, and gastro 17%. This has all led to a higher ARPP.
So now what percentage, ma'am, of your patients are insurance patients? You've given one number, 8% increase in volumes because of that. But
yes.
But overall, what percentage of the patients today coming to Apollo hospitals are insured? And because that number is going up, can we continue with this double-digit ARPP increase?
So first, the insurance improvement is about 5% total volumes. If moving up from 43 to 48%, now come from insurance. Can we continue with the ARPP of 11%? I think, we started from a little bit of a low base effect, and we've moved to this number, therefore showing 11%. Will this continue? I think it could probably continue in the range of 5 to 6%. But what will improve is volumes.
Right.
And when volumes improve, operating leverage and therefore absolute EBITDA and profitability will continue to improve.
Right. Ma'am, hi. Morning, Prashant here. And thanks for joining us. Always good to see you. I mean, Apollo, of course, top of the charts this morning in terms of stocks which are doing well on the back of the numbers. I just had a basic question. Did something change this quarter to increase insurance patients? I mean, was there a resolution to something?
I think you've asked me this many times, what is happening with insurance. So
No. I'm saying because you said you started by saying extra 8% has come because insurance penetration is higher.
I think, we've managed to get a very collaborative dialogue with insurance.
Right.
So we've tied up the insurance partnerships. And, we've managed the rate increase.
And that happened kind of this quarter. That's why it showed up in a big way in this quarter. Is that?
Yes, end of last quarter, so it showed up in this quarter.
It showed up in this quarter. So it's all done now. It's all tied up, right?
Yes, for the next 2 years, yes.
Okay. And this 8% volume, you used the word extra 8% volume growth. So that's
yes, so 8% of the volume growth came from insurance patients.
Okay, we will correct that at the bottom. So 8% of the volume growth came because of the insurance tie-ups, and of course, closing some of these partnerships, etc. Got it. And we'll just do that. Now, ma'am, just one point on the digital health business. Revenue growth has been a bit softer. Could you give us a sense of what happened and where do we go from here?
So if you look at the digital health business, there was still, in terms of GMV, 525 crores of GMV, representing a growth of 28%. So GMV has grown. Yes, in terms of it, they do have plans to grow it much, much faster. But the important thing is to recognize that they are doing about their daily active users has gone up to 9.2 lakh people, which is 18% growth. And I think they continue to grow their three streams of revenue. So they sold about 13,582 insurance policies, representing a GMV of 12.57 crores. So insurance is something that will gain traction. How they pay for insurance, I think, they will, it will come as EMIs. So you won't capture the full value in a single year. The revenue from selling medicines, etc., the e-pharmacy, has did about close to 35,000 transactions per day. Digital is picking up, and their diagnostics is also growing rapidly at about 24%.
Okay. The digital cash losses in the healthcare business are the lowest ever. When do you break even? Is it imminent?
Yes, I think in the next quarter it's imminent. But on the whole, I think we have to look at the company as a whole. 2,827 crores of revenue, They have come in with a strong EBITDA of 128 crores and 87 crores of profitability. So this is in spite of writing off 30 crores of ESOPs. So there is a very strong traction and a movement towards profitability, which should happen in the next 6 months.
Okay, in the next 6 months. Ma'am, what's the current status of the Apollo HealthCo Keimed demerger? And is the listing timeline of Q4 FY27, Q1 FY28 still firmly on track?
So they've got CIC approval. I think the team is working very hard. My sister Shobna is working very hard on the listing process. So we'll hear more about it from her later.
Yeah. Ma'am, any outright acquisitions on the radar?
Right now, I think, we've got our hands full. We're opening 1,325 beds in the next 6 months. So this is our focus. And post that, another 1,500 beds that will come on stream in 28-29. This should lead to revenues growth of about 18%. So the hospital services space will be in a very strong growth trajectory.
All right, final question, ma'am, before we let you go. You've delivered big wealth for shareholders and appear very, very focused with regard to the growth trajectory going ahead. Just one quick query. Promoter entity, they went ahead and they sold close to under % middle of last year. Is there any target holding? Because the street is thinking maybe there could be a potential sale yet again. Is that possible?
Oh, not at all. Not at all.
Promoters intend to hold on to the entire stake?
Yes, no, I think promoters continue to be passionate about Apollo. We hope to be driving growth.
So no further promoter supply is what you're telling us in the market.
Yes.
Ma'am,
yes.
sorry, since we have you, we're on a earnings non-stop sort of treadmill here. But one last question: the Indraprastha Indraprastha hospital situation in Delhi. Could you tell us anything, ma'am? Because there's been a lot of chatter around that you're going to eventually increase stake and that Delhi government is the other partner on the other side. So anything you can tell us?
We continue to have a very collaborative dialogue with the Delhi government. It is a bit early to comment, but we are both hopeful of a very positive outcome.
Okay. Which kind of would mean you end up with a higher stake, if it comes to that, after all these negotiations. Obviously, I won't push you to give us more, but that's directionally right?
Yes, I think, we do feel that we would like to do more in Indraprastha. Let me just end with that. And very soon we'll probably be able to talk about how the contours will look like.
Okay. Thank you very much for that.
My pleasure.
Really appreciate it, ma'am. Thank you. 5% on Apollo Hospital. Stock's doing extremely well. Nigel, I think the Titan management ready.
Well, that's right. Let's go across to Titan that reported a rather strong set of numbers in the Q3. Revenues jumped 40%. Margins expanded by around 100 basis points. There was an exceptional loss due to the new labor code as well. We have Mr. Ashok Santalia, the CFO at Titan. Hi, sir. Good morning. Always good to have you on the show. Before we get to the numbers and push you for some guidance, how are demand trends shaping up? Q4 has a lesser number of weddings, but I understand that there is some pre-buying that we're seeing in anticipation of the wedding season. So how have demand trends been, given that gold prices have spiked up?
Yeah, thank you, Nigel. I think gold prices have been spiking up for last now many months.
Yeah.
But January saw for the first time a major correction also, albeit temporarily, from $5,600 per ounce, it came down to $4,700. And then again, it is towards $5,000. So, but January, to answer your question, has been again a very satisfying quarter. We do have, if you know that in Titan, we do the Festival of Diamond in January, February, and which is currently going on. And we have a good response on studded jewelry also. So hopefully Q4, while market and gold prices are volatile, but we expect it to end the financial year on a strong note.
What was the volume growth, sir, in Q3, or was the entire 40% growth driven by an increase in prices?
We mentioned, Rima, that buyer growth is flattish, while between the categories, if you see studded jewelry saw a low single-digit buyer growth, but gold jewelry actually have very, very minor negative growth in buyer.
Since you mentioned studded ratio a couple of times, sir, that's come down to around 26%. When we had spoken a couple of years or so ago, I think it was at more than 30%. So is this the new normal, mid 20%, 26 to say 28%?
So it's outcome of math where gold prices are, say, 60-70% up compared to last year, and while studded prices or diamond prices are holding up. So actually, while buyer are more absolute growth in studded jewelry is decent, but the ratio keeps coming down because the gold prices are skyrocketing.
Mr. Santalia, gold has been top of mind, top of headline, everything for the last, I think, months on end, and it reached a frenzied kind of thing. This pullback we've seen in gold prices, right, 10%, 12%, you think that helps volume growth at the margin in that sense? In this quarter, if prices stay around here and they're not like in a runaway frenzy?
Very difficult to talk about that. Gold seems to be in secular uptrend. Those factors which have been talked about for gold going up have not at all changed. So gold prices, some momentum would show. But at this level, in the rising gold price scenario, margins of jewelry business do see a little bit pressure. And we have talked about that, Prashant, that gold coin sale percentages have gone up, and even diamond jewelry margin come under pressure because gold content in terms of value goes up into those jewelry. But at the same time, we are taking a lot of actions which have some offset impact, like introducing 14 karat, 18 karat, 9 karat modern jewelry, and even light jewelry work has started doing well. And at the same time, a lot of campaigns, new collections, engagement with customer help us to still deliver a margin profile which we think is appropriate for our company and our business.
Okay, all right. Sir, could you tell us what's the target with regard to Beyond, the affordable, lab-grown diamonds business? What is the investment chest, if you could tell us about that? And expected revenue, say, in the next 3 years or the next 5 years, how large can it be?
I have talked about that in retail business allows you to experiment and not really define the end post upfront itself. Current idea is to set up 8 to 10 stores in next 4 to 5 months, and even deep dive what we have been studying this market and consumers on the actual, when they are actually making purchase at our store. So that's the 6-month, I would say, period which we have taken to us. And depending on the outcome and our conclusions, we will decide the ramp up speed. If everything works very well, then we can very, very quickly ramp up and then decide what are the goalposts. But first 4, 5, 6 months is still, I would say, exploratory on the ground with the real transactions.
Will you be able to give a number, sir, on the Beyond sales in Q3 and the kind of margins? I understand very early stages, but is there a number in Q3?
So Beyond only, the store was for 2 days in Q3.
All right.
29th December we opened. So it is only 2 days in Q3.
And how has it been in Q4 so far? The first
half month has been good, the way we expected. There is a lot of curiosity. There is a lot of interest. Many customers are coming and
Any
buying.
sales numbers, sir, for the first 40 days of Q4?
No, it will be too premature for me to talk about that.
What is the outlook on international expansion? Because you are expanding in GCC, Middle East. I think you'll acquired that Damas jewelry stake as well. Yeah. What is the international expansion plans?
So Damas has been 67% has been completed recently, and from 1st January that will get consolidated in our books of accounts. So Damas, of course, will now pick up its growth trajectory on the Arab segment side and kind of expand its retail network a little bit and do whatever it needs to be done. Some of the Tanishq expansion are also coming through, a couple of Damas stores which were in the catchment area where actually target segment or customer segment is more appropriate for Tanishq. So some of those stores in Q4, single-digit number, I would say, will get converted, and that will kind of expand Tanishq footprint in GCC market. In the US market, we had opened 2 stores in last quarter and couple of more. We were slightly slowing down and waiting for the outcome of tariff and our supply chain solutions. Both together have come in, like tariff situation also have eased out, and as well as our supply chain solutions have also fructified. So I think US will again start gaining traction on further expansion. We decided also Canada as a next geography for us. So in FY27, I expect 1 or 2 stores of Tanishq coming in Canada as well.
Okay, all right. Very quickly, sir, with regard to the EBIT guidance, you hold on to that 11.5%. I think is what you'll have been hinting for. Any upside risk there?
11% centered around, I think, FY27, 26 we will able to do, and then we will talk about next. But it is becoming increasingly clear to us that in rising gold environment, perhaps we need to think about absolute EBIT growth and then too much wedded about the margin, while we will be very mindful of the margin efficiency. But it might, if the gold prices keep going up, it might see some pressure and may go below 11%.
Mr. Santalia, are you in talks to buy out TBZ, Tribhuvan Das Zaveri?
No plans, I think. No plans. No.
Okay. No approach, no talks, no initial talks, early talks, nothing?
I will not comment anything, but we don't have any plan.
Okay, no plans as of now. Thank you very much, Mr. Santalia. Appreciate you joining us, and good speaking with you here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back in just a bit. Management of Samvardhana Motherson to talk about their third quarter numbers. Numbers were good. Stock was up yesterday. Pankaj Mittal is going to be with us on the other side. Welcome back. Samvardhana Motherson is surging in trade today on the back of reporting a strong set of third quarter numbers. It reported the highest ever quarterly revenue. Margins came in above 9.5% for the second straight quarter. We have Pankaj Mittal, whole-time director and president at the company, to take some questions. Thank you very much for joining us, Pankaj. Good morning and congratulations. It's a strong set. Some specifics, I guess, if we can tackle first. Margins for the modules and polymer business came in at 9.7%. Integrated assemblies 15.2. I guess the margin beat came through from these two segments, right? Is this structural? Is this one-off? And will you be able to sustain margins in these segments and then consequently overall numbers?
Good morning, and thank you for hosting us here today. Well, the company is having a diversified portfolio. And definitely we had highest ever quarterly revenues and good profitability. Our emerging businesses have also done very well. They led to a growth of about 57%. And the emerging businesses, especially the consumer electronics and aerospace business, is also poised to grow. The modules and polymer business has done well. We had announced in Q1 that of the transformative actions which we were taking, and these transformations have yielded results, and we will continue to see good results as we move forward. Similarly, in the integrated assembly, this is a new business which we had acquired. It was a profitable business which was doing good. And then it has had synergies coming from the group. It was only doing assemblies. As we move forward in the group, we have had more integrations. We could do more products, which could be inbuilt into these integrated assemblies. And hence, we have seen a good, robust performance. We do believe that the markets are doing well. There is a stability as we move forward. The overall car volumes in the next year are also projected to be quite robust. The commercial vehicle industry had taken a beating in the last quarter.
We'll come to the volumes, actual volumes, Pankaj, in just a bit. But margins, you're saying, so the answer is in the affirmative, that you'll be able to hold. This is structural, this is improvement is here to stay, and margins will be at least what you reported in the quarter or higher?
Yes, basically these are structural, And as we move forward, these businesses are also global. They're in different regions, different sets of customers, different profiles, but these are structural in nature.
And this 20% increase in copper prices, did that negatively impact margins in Q3? And how will it affect margins going forward? Is there a pass-through clause?
Yes, we do have pass-through clauses with all our customers. There is a lag in the recovery of copper prices, normally about a quarter or 6 months in some cases. So as we move forward, these will get averaged out, but they definitely have an impact of about 1% on the wiring harness business.
Okay, so there was a 1% impact on margins on account of higher copper prices in the wiring business. But in the next 1 or 2 quarters, there will be complete 100% pass-through.
Yes.
Okay. So what percentage of your revenues come in from the non-auto segment? Because you are seeing some very strong growth, for instance, in aerospace. So can you give the current performance in Q3 and the outlook on that, on the overall non-auto business?
Overall, if you see, the emerging business has grown by about 57%. Correct. Out of our total growth, this emerging business also includes the integration of Atsumitech, which we had acquired. And the non-auto business we had mentioned last quarter was contributing around 5% of our total revenues. But these are businesses which are growing at a very fast pace. As you would see that our consumer electronics business is also poised on its ramp-up trajectory. So by the end of 26, financial year 26, we will be on a good way to produce about 16 million. And then with our plant 3, which is the largest plant in our whole group across all our divisions, is going to more than double the capacity again. So this is how we are poised on the consumer electronics side. On the aerospace side, also, we are tier 1 supplier to the major aerospace companies. And with the FTAs coming in, both from the European Union and also from the North American side, it will also give a very good tailwind to these businesses to grow further.
The aerospace manufacturing is in India, Pankaj?
It's also global. We do manufacture in India as well as in Europe at the moment. And as we move forward, it will again become more and more global. But yes, the aerospace companies have very strong interest in India.
So the share between automotive, aerospace and consumer electronics, what is it at now and where do you see it?
As I mentioned, that the non-auto business in the last quarter, last quarter, when we had announced, was about 5%. We do see that our auto business also tends to keep growing. But these new businesses, which we had set up about 6-7 years ago, from nearly zero, they have come up very well. Consumer electronics was not there at all. And these are all being driven with the interest from the customers. And they see a good execution capability in Motherson. They say that over a period of time, what we call as DEMAL, design, engineering, manufacturing, assembly, and also logistic capabilities, which we have built. So we have become a specialist, which helps us to support many different industries. And that will lead to our 5-year goal, a vision of about 108 billion.
And since, so this non-auto revenue is roughly 5%, 2 quarters back. But because you're expanding capacity, consumer electronics is also seeing strong traction. What will that number increase to and how are the margins? Because on the whole, when we look at your emerging markets business, the profitability is weakish.
That's because you see that there is a huge investment which has been there and the new acquisition which came in. So when you see the new the emerging markets, you will see that. But over a period of time, as these capacities are bringing in the new volumes, it will even out. And we do see, as I was mentioning earlier, that the automotive business is also growing. The 2 new acquisitions, which are at different stages of completion, relating to Nexans as well as Yutaka Jiken, will also come in place, which will be giving us more than $2 billion of revenues in the coming years.
What could FY27 then look like because of the acquisitions? Then 10 of the 12 greenfields are also likely to be completed in FY27. What would the number look like that you're targeting next year?
Well, we are targeting a 5-year vision, and we do see all engines firing at the moment. Good growth. Markets should become better. With FTAs also, seamless supply chains will come in place. So we do see a very positive environment as we move forward.
Your capex during the quarter, sir, was about 52% of the EBITDA. What is the capex number? The number is 1,594 crore for Q3. What is the capex number for FY26 and FY27?
Well, capex for FY26 will be in the range of 6,000 crores plus 10% what we had mentioned. So we'll be around that. And for 27, we'll be coming at the end of this next quarter as we firm up our plans.
Will it be higher directionally?
Well, we see that. Sorry, go ahead.
No, go ahead. FY26 capex compared to 26?
FY27 capex, we will come to you end of the next quarter. We do see good growth coming in, and we will let you know at the end of the quarter.
Yeah. So just one question on consumer electronics, right? You were tied up with this company BIEL on the glass front, right? And presumably the client is Apple. So you're supplying to them, and then they kind of use this, or you're using you're part of the value chain here for stuff which is being made in India right now.
Yes, we have a partnership with BIEL, who they are our technology partner, who help us in processing the parts which we manufacture, and then we are part of the supply chain.
For the phones which are assembled in India?
Well, for different products, and you know what BIEL manufactures, so that's what we do.
I see. Yeah. And hope is that, you'd be able to sort of, increase and do more along the way.
Yes, when the plant 3 comes up, we will also be doing more vertical integration with this, so the value content will grow. And as we move forward, we believe we will have more products, and the customer penetrations in different segments will grow.
Okay. One final question. In the North America CV market, you've spoken about a 5% quarter-on-quarter increase. Is that a cyclical bounce or the start of a sustained upcycle?
Last quarter, there was a downturn by about 27%, which was very sharp. The EPA 27 norms will be coming in, and that will lead to some pre-buy. So we do believe that the North American market will bounce back in this year. We have already started seeing the reports coming in from different commercial vehicle makers that their fleet owners are asking for more products.
Got that. Thank you very much for joining us. Appreciate it, and good luck as you continue to execute across a range of segments there. So that's Samvardhana Motherson. Stocks up about 4.5% as we speak. Now, Eicher Motors is, we're going to stay with the auto space, but Eicher, of course, along with Apollo, are the two biggest gainers across the board with huge volumes. Let's revisit Eicher with Sudarshan. Take it away.
So for Eicher is the top Nifty gainer, up currently more than 6%. For Eicher Motors, volume was never a concern. For the last 2 years, while company has been reporting a huge volume growth, one concern was the margin improvement. Now in this quarter, company has reported a margin of 25.5%. That's at a 5-quarter high. Remember, when there was a talk about the competition 2 years ago, company had come out and given the statement that company would focus on growth over the margin. But this is the first time after several quarters that EBITDA has outperformed both volume and the revenue growth. And because of the big surge in the volume that we have seen for both Royal Enfield as well as the commercial vehicle, revenue has seen an increase of 23%, EBITDA has risen by 30%, and margin, as I told you, has come at 25.5% versus 24.2% in the same quarter last year. Even going forward, company is saying that strong momentum that we have seen in the last 2 quarters will continue in Q4, and even in FY27, company is expecting motorcycle industry to see a high single-digit growth, and it continues to gain the market share, especially in the mid-size segment, and the exit market share, the Q3 FY26 was almost 89%. So looking all good as far as Eicher Motors earnings and the outlook are concerned.
Thank you very much for that. For the markets, by the way, we've drifted lower after opening mildly higher, in the red now, or flat now. It's 25,930 on the Nifty, but the tape is red. The mid-cap index is down 1/3 of a percentage point. IT continues to remain weak, subdued, and PSUs like Coal India, ONGC are dragging and putting the pressure on the markets. But let's talk about Britannia. Vinny joins in with the numbers.
Hi. So yes, Britannia, good set of numbers that's coming from the company. Revenue growth is in line with expectations. EBITDA margins, that has seen an expansion of 130 basis point. Overall, EBITDA has seen, gross margins have seen a growth of 450 basis point, revenue growth of 8% as well. The company highlighted, yes, in October there was some disruption due to the GST transition that took place. But in November and December, again, things came back to normal, 12% in terms of a growth that came in for the business in November and December. Healthy growth mainly this time in November and December was driven by strong momentum across their segments, especially biscuits as well as adjacent categories. Both of them saw very good growth. Overall, stable commodity environment is also something that is supporting the margins. So on and all, good set of numbers that's coming from the company. The stock is buzzing in trade, more than 3% of gains.
All right. Thanks very much, Vinny, for that. We'll take a break. We're back. Manisha with us on the other side with commodities in focus. Stay tuned.
Welcome back. Let's talk commodities now. Manisha is joining in and she's focusing on silver this morning. Hi, Manisha. Why is that?
Well, that is because there's some stability that seems to be returning into the markets. For the longest time, we've been talking, especially for the last 1 month, on how the volatility in sense of standard deviation for silver is 85 versus 35 of Nifty. So silver in some sense right now seems to be stabilizing. For this year, we are up 14%. For the commodity, it gained 147% in the previous year. And we've done $121 an ounce of an all-time high on 29th of January. It's trading around, as I said, between that $80, $85 an ounce at this point in time. Well, the global silver demand is expected to be steady in 2026 is the view coming in from Silver Institute. They actually came out with a report overnight giving out a lot of numbers. They say that there is a very strong gain because of the retail investment demand. So whether it is about HNIs, institutions, family houses, they have been buying silver in physical and in ETF as well. The January data did tell us that it is record number of silver ETF buying that we've seen in the month of Jan therein. Interestingly, when you look at the global silver deficit, last year is estimated at 117 million ounces. This year, it is lower at 67 million ounces. But 2026 also is a 6th straight year that you're looking at a deficit within that. Industrial demand clearly has taken a hit because of the silver prices surging so much. So fabrication has come down by 2%. Jewelry demand, because of the high all-time volatile prices, is also declined by 9%. And silverware is expected to decline by 17% when it comes to 2026. Take a look at the overall estimates then in investment demand, 20% of gains there. As I said, ETF, central bank buying, institution buying, retail buying, all of that has been very, very strong. The global supply is anticipated to increase by 1.5% in this year, while the mine production also is expected to increase by a percentage point. This is the highest that we're looking at in last 4 or 5 years. So definitely more silver coming back into the markets, reacting to those all-time high numbers. Recycling also seems to be gaining at around 7% on your screens therein. So when it comes to demand, that has seen a bit of a decline. The supply in 2026 is expected to increase. The outlook for silver is quite interesting. So it has both sides, a market talking about both sides therein. Goldman Sachs still reiterates that $85 to $100 an ounce of a range is what you could be looking at for the rest of this year. Citi is put at a target of 110 and UBS talks about 85 to 105 as well. And then you have Saxo Bank saying that silver could average at $90. There is Bank of America talking about an average price of 65. And then you have JP Morgan talking 50 as well. So it's going to be a volatile year going forward as well, with banks talking about 50 on the lower side to 105 on the higher side.
All right, Manisha, thank you very much for that. Keep an eye out on those rates and those prices over the coming few weeks. Thank you. Well, time for a quick break. On the other side, our special segment, it's the economy. Latha discusses the trade deal and its impact on rupee, India's macros with Santanu Sengupta and Arup Parikshit. That conversation comes up next.